The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. And we're going to start the show with one of the charts from my friend and co-author, Shane Smolian, from wolftrader.net. Basically, it's showing some of the astro cycles that are coming in, along with the pattern that we're seeing. So we still believe that we've got a little bit more to go to the upside. I believe that we're very, very close. It could happen any time, but next week would be the ideal time if we're going to have, towards the end of next week, early the following week would be the best time for it to come in. If there's going to be a major top in here, and you won't really know for sure until we take out those March 11th lows. Now, I would expect that the Dow Jones and the S&P and the NASDAQ will take out the March 11th lows much faster than the New York Stock Exchange Index, because the New York Stock Exchange Index has made another new high today. And we made another new high yesterday in the Russell. So we're still in an uptrend in this, but we're getting very, very close. I particularly enjoyed the comments that Basil made towards the end of his show about the VIX index. To me, I think that's one that really has my interest, because one more jab down would take it down to the lows from last July. And if you go back and look at the chart on that, you can see that we had a move where it went 4 times from that level. So that'll be a big one. I know it's not tradable for most of you folks. You don't follow it, but it is something to keep an eye on, because we will be expecting really increased volatility into May. And then we have that seasonal, of course, in stocks sell in May and go away, and then we'll wait and see. This is the commodity show today here at TFNN. We're going to have Rich Anderson as our guest from Anderson Capital Management to talk about the grains at the half hour. But what I'd like to do now is just to get into one of the commodities that we don't trade very often, but it's involved in our economy a great deal, and that is lumber. We're going to take a look at the long-term weekly chart on lumber, and if you look at this, you can see that we are very, very close to a 61% retracement in lumber from where we were in 2009. Whether that'll have much of an impact on the economy or not, I don't know, because lumber has been going down since 2013 when it topped, and yet the market continues to go higher. So you've got to look at each one of these, trading vehicles separately, but there is a lot of support coming into lumber around the 240, 243 level, if that is going to be a case. Now, from the technical standpoint of what we're looking at in gold and silver, we had something very important happen today, and I would like to bring this up and show you, because it's really indicative of how some of these markets move off of these Fibonacci points that we watch all the time. Today's high in gold was an exact 61% retracement from the high we made just 2 weeks ago, back in on April the 16th. Today's low happens to be exactly 61% of the low from 4 days ago. So it's still holding that area very, very closely. Now, if we take a look at silver, silver is totally different, folks, because silver is extremely weak. I mean, it is, it could barely make, we took out the highs of yesterday, but we barely made a 382 retracement of the high from that same level. So as gold was making a 61% retracement of that level, silver was only making a 38% retracement of that level. But it tells you that this market most probably has got more to go to the downside. That's the way it looks to me. Now, if things turn around and we get gold above 1210 and we can get silver above 1660, then I would say yes, we got a shot to go higher. But right now, as of today, there is some problems here because we could not get above those major fib points, and that usually means something of great significance, in my opinion anyway, of just looking at it. We had a first question here was about the New York Stock Exchange Index. I'll put this up and show you here if you'll give me a second. We made new highs yesterday. We haven't made new highs today. I was having a data problem when I said that before, so I stand corrected. We have not made new highs today. We still have not taken out yesterday's low, but we are still setting very, very close to the highs. Looks like we got another few percent to go to complete this pattern here, and that would be an ideal situation to take a look at it. We are almost exactly at the same price in the New York Stock Exchange Index as we were back on July the 7th of 2014. So this market is, for the basic stock market, has really gone not very far. It's just been the 531 stocks of the S&P 500, NASDAQ, and Dow that have made the big moves. So that's that we're watching with that. Now, I wanted to take a quick look here at the Treasury note market and compare it to the Treasury bonds. We've done this before, but we need to do this because there's a big divergence here when you look at the nearby contract of the June, which is an aberration. This is not really what's happening to bonds. The bonds have not made these tremendous highs like you're showing here. It's only the September contract, and that's it's only the June contract because that's the way the specifications were changed 18 months ago when this contract first came on the board. So keep in mind that the Treasury notes have just made the 786 retracement of the high we made back from February the 2nd. And so it appears to me that we have a situation where we're getting ready to see higher interest rates. Now, there's all kinds of jawboning about the Fed and what they're going to do and when they're going to do it. And they're going to do it when they want to do it. And believe me, it'll probably be a big surprise. If you remember Alan Greenspan back in '95, he came in and he dropped rates by 0.5% right in the middle of the market day, and there was a gap of 50 S&P handles. I believe it was, I don't remember the exact, but it went from like 1025 to 1075 without any trading. And we had all kinds of bankruptcies on the floor of the Merc that day because of the fact that these locals had no way to cover their positions. And, they thrive on liquidity. And what he did was to destroy liquidity. Maybe that's what's going to happen this time or not. I don't know. But I believe that we have some big problems coming. They're going to be they're going to be accentuated by the problems that we have in our debt market, primarily bonds and notes and corporate bonds and junk bonds. Those are the ones that will be the starting catapult for this, because you just don't keep interest rates this low for this long in an experimental phase and not come out of it unscathed. That's the way it looks from my point of view. But maybe history will be different this time. But we'll have to wait and see if that is going to be the case. Now, we have a situation coming in wheat that people have been talking about here at TFNN, and so have I, because I'm waiting to see what happens here in the wheat market. If you give me 1 second, we'll cover this here and we'll talk about it here. We're going to look here at the wheat going back just about 5 months, and we'll be able to see that when we were making that high back in, it was way back in, I think it was November, wasn't it? I know I was in, yeah, well, it was December. Yeah, I was still in Philadelphia at the time. We were making that big ABCD pattern with that big shooting star candle, which is one of the most bearish of all candles. And then we had the huge breakdown, and we've been in pretty much a consolidation from February, March to April. We're making lower lows and lower highs, so we're still in a, much stronger bear market. So my opinion is that we're probably going to make new lows here sometime towards the end of April, early May. But boy, you have to really, really pay really close attention in May, because one of the things that we're going to be talking with Rich Anderson about is this high pressure system that's been coming and going over the United States and northern United States and Canada, which has been causing this tremendous drought in California and the exceptional cold weather across the east, which actually froze the Niagara Falls for only the second time in history. So it's going to be very, very interesting during this time frame. If we make new lows in these greens, that will be the time that you would want to be watching for a potential reversal. And the reason for that is we hardly ever go through, I can never remember one, and I've been trading 55 years, we hardly ever go through a trading year without at least one or two crop scares. I know we have good supplies this year, but these supplies can, they can disappear in a heartbeat if we have, even a minor correction in some of these crops that we have, because the world itself is, it's pretty hard to feed 7 billion people, so we can't afford to have two back-to-back crop years where they're very, very poor. So we've got to watch that, very, very closely. So the wheat should have some support down at the 450 level. We're trading at around 490 right now. Whether it's going to get to that level or not, because the lowest we got last year was down at the 470, so we're 18 cents away from that. But I think we could still touch that one more time. We'll talk more about this with Rich when he comes on the air, and we will see what we're looking at that point. We want to take a quick look here at the cattle. Just give me 1 second. We've had a couple of people ask about that. If I can get the cattle chart up. Let's see if we can get it up here. 1 second here. This should do it. Nope. Maybe yes. Hold on just a second. There we go. Yeah, here we go. This cattle, we've got a situation where we had a pretty good move down in the cattle off of the 61% retracement, and now what we're doing is we're rallying back to the 61% retracement of the previous high, and we'll see what really happens. This weather patterns are, we were mentioning just before, absolutely crazy. I can remember in 1964, right around Easter time, it was in the middle of April at that time, we had a tremendous snowstorm in Chicago. I was doing some MBA work there, and I was staying with my grandfather on the south side of Chicago in the old Pullman houses that he had lived in since the 1920s, and they didn't have parking, and so I had to park my little car, out on the street, and I had a little 356 Porsche, and you couldn't see the car. It actually, all you could see was the little part of the canvas top, and it took about 2 weeks to get that thing, out of the snow and everything, but this thing started right away, so that was the important thing. But boy, I remember that particular time in April where we had that tremendous snowstorm in Chicago, which is pretty amazing for that time of the year. Oh, we've got a break already. Oh my, okay, we got stocks down a little bit, gold down a little bit, and we got the bonds down quite a bit. We'll be right back after these words.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, and I believe we have a call from our friend John in Philadelphia. John, are you there?
Good morning, Larry. Thanks for taking the call. Yes, I wanted to ask you about crude oil. And
yes, I posted the chart into the room there, 4-hour chart.
Thank you very much. I see we've got all sorts of beautiful Gartleys and ABCD ups going on here. I'm wondering if you could share with us your weekly charts or longer-term daily, and just share with us how high you think this might be able to trace out with its zigs and zags higher.
Okay. Well, John, given this 4-hour chart, you go back almost a month. So for me, that's that's history making to go back farther than a month. But you can see the patterns there. You've got some beautiful butterfly patterns forming up at that $57.50 to $58 per barrel level. 3 weeks ago, you couldn't find anybody that wanted to buy crude oil, and now everybody thinks it's going back to $100 a barrel. So it should have some really strong resistance up here, because those patterns are they're double, because you have several swings that are telling you that that's where it should go to. Just like if you were looking at the downside, you had several swings to the downside telling it their support. We now have two major areas up here, $57.50 a barrel and $58 a barrel, that tell us that this should be some really strong resistance. As far as a longer term, it's not even close to a 382 retracement from where we started to break down from. So this is still a major bear market that's having a nice 5-week correction is what it looks like to me.
The reason I ask you that question, and thank you, by the way, I remember you back in February had a nice conversation with Mr. Is it Meridian?
Bill Meridian, yes, out of Vienna, Austria, huh?
Right, and in it he had shown how he had speculated way back last summer a major decline, and that it was close to finishing, and that once it was done, crude oil would likely be undergoing a meaningful bull phase, meaning in not $100 target necessarily, but a sustained rally phase with rallies to higher highs and corrective pullbacks. And therein lies my reason for asking if we do top out at your 57.5 area, pull back, and a Gartley buy setup, and bought it again there, what sort of higher levels you might think be potential? That's kind of
okay. Let me put the daily up for this crude oil so you can see it on the long-term daily. The 382, John, of the whole move from where we broke down from a 108. That comes in at $67 a barrel. That would be equal to about double the rally that we've had so far. Let me put this in here so the folks can take a look at it. That would be the level that I would say it could get to would be $67 a barrel, because we've been down for quite a bit ever since last June, and now since it's been a month now. We've been 1 month now where we've had a couple of 3 or 4 day corrections during that time. But if this is really bearish, this is about all we're going to do. If you went back to last May, we rallied from May 12th to June 16th, and that's when the big bear market started. So we should be completing the end of this bear phase, bull phase here, very, very shortly if it's equal in time. That's what I try to see what the markets do when they repeat, and this is repeating what we did last May.
Gotcha. Very good. Excellent. Larry, thanks so much for that, and sure look forward to you speaking with Mr. Anderson. So thanks again.
I do too. Thanks a lot, John. I hope to see you when I'm in Philadelphia, my friend.
Look forward to it.
Okay. I believe we have another caller from Atlanta. Danny, are you there?
Hey, Larry. Can you clarify your position on gold? Are you buying the 618 retracement today, or?
No, I saw the 61% retracement. I tried to get short today, but I frankly was a little bit late, and I didn't see it till about 10 minutes after it happened. By then, it was already $4 off the high, so I decided to wait. I wasn't interested in buying it because I always watch silver and gold together, and silver is just so weak, Danny, that I don't think it's ready yet. It just doesn't look like. I mean, silver could barely make. It actually missed it by 2 cents, the 382 of that same high where gold made the 618. So we got to get some strength here. Hey, Danny, stay with us for a second, okay?
Okay.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back with Danny in Atlanta. We'll have Rich on the line in just a minute. Danny, we were finishing up on the silver, and, I keep an eye on that, even though it's the poor man's gold. It usually runs tick for tick with the gold market, and when it's weaker than gold like it is now, that is usually a strong indication that gold's not ready to go. So that's just my opinion of what I see.
Okay, is the HUI or XAU giving you any clues?
No, they're giving me no help at all. They're just doing pretty much the same thing, just staying in these really tight trading ranges. And but I don't trade those very much. I look at them from an analytical purpose, but the gold is my primary vehicle, and that's what I watch the closest, because that's the big market, and it trades off the numbers, as you know, extremely well. You can show it today by the exact 61% retracement of the high 2 weeks ago. So that's why you're watching it so closely.
Okay, great. And I'll be listening for Rich.
Okay, Rich, are you on the line?
You bet. How you doing, Larry?
I'm good, my friend. How are you?
Great. Back in Minnesota.
Yeah. Well, are you still having snow on the ground?
No, they hardly got any this year. It's been a dry winter.
Oh, no kidding. That's
isn't a concern yet, but give it a few more weeks and might be kind of interesting in the grains.
Rich, that was one of the reasons, when I asked you to come on the air so we could talk a little bit about the high pressure center that's comes and goes across the northern United States and southern Canada. And I remember you going over this with me back in 1988 when you were visiting me out in Pismo Beach, California, and Lake Cachuma, the lake north of Santa Barbara, was really, really down low. And you said next year that lake would be filled with water, and by gosh, you were right. And now, Rich, that lake is almost empty. I mean, I guess this is like 100-year drought in California. I mean, what do you see from a weather standpoint? I know a lot of your contacts watch weather quite a bit. What are you seeing in the weather that might give us some relief here this spring?
Well, I mean, what you're talking about is how the jet stream is so far north, and it's avoided most of the western corn belt. The time where the markets get really reactive to weather is when the money gets put in the ground, when the fertilizer and the seed gets put in the ground. By the way, it'll be cheaper seed this year for corn. It's shocking what a bag of seed corn costs, and the more crossbred you have to it, the more stacked they call it. Like it's drought resistant or corn borer resistant, the more expensive it is. And they're just trying to lower their input costs this year. So I think come later in the season, you'll see that it just doesn't have the vitality it's had in the past because it doesn't have as much fertilizer, and it's not quite as good a seed as in the past. That's what I think is going to occur. But it's just not yet. Look, the wheat had a nice rally 3-4 days ago. Then we get a little weather, and wheat goes straight down.
Sure.
And if the wheat that should react the most is Kansas City, July, because that's new crop Kansas City wheat. In Chicago wheat, there's more than ample supplies. Yet Kansas City has lost to Chicago the last, actually the last 8 or 9 days. It's lost from 53 down to 23 3/4. So if you're going to play weather, then first one to play is probably the Kansas City-Chicago wheat spread. And it's probably 2 or 3 weeks away before corn and beans become an issue.
Rich, I'm really amazed at how well corn has held up. I mean, we've been, basically, not more than 40 cents off the highs from last December after, the biggest crop we've had ever. And, I mean, it's really amazing. I mean, there must be some really strong demand for corn here for it to keep up with all these supplies we have.
There's been decent demand, and that's in spite of a very strong dollar, as you know. In fact, if there's one market where it's a very crowded trade that the euro's going to par and the dollar's going to the moon. There's one trade that might run into trouble here late this quarter or early next. It's the dollar. I was talking with our good friend earlier today, and that was one of the markets we were talking about. But by the way, on the silver, if it takes out today's highs, I think the rally has started. It's just coiling up, and it's in a trading pattern, but it closes higher today and then takes out today's highs.
I think that's got a chance. I was surprised that it couldn't do it, early this morning, because I was watching it early this morning, and I was surprised, that gold went up and held really well up at that, 1209 level, and I said, well, it looks like we should get ready for silver to move, and I couldn't believe silver couldn't even get above $16.40 an ounce, but I'm still long-term bullish in that. I don't know if I'm holding my hat on the wrong side of my head or not, but I still like those positions. As long as we can stay above those lows we made 5 or 6 weeks ago, I still think we have a chance.
Right. I mean, the gold turns negative if it gets below Tuesday's low, but if silver takes out today's highs, then the whole thing's going the other way. If there's a market that's probably fully priced in right now, it's the crude oil. With this rally, still got 17-18% more stocks on ships offshore. Cushing's kind of full. China's stocks are 115% of a year ago. Mm-hmm. So if there's a market that's maybe had enough of a run and maybe it just jockeys back and forth, in the $10, $12 trading range over the next several months. It's a crude, and you can. I like selling markets where you're selling a premium, and the May goes off, just like April hogs went off the board yesterday, at 63.5. Well, May's the next month, and they're 70 cents. So are they really going to be worth that much more 30 days from now? You know, the market's going to have to prove itself, and I think it's going to be a tough job doing it, just like May crude oil's cheaper than June or July. So you've got a natural edge. But today I'm watching it, and it's made new highs yesterday, and, you know, it's struggling here today, and so I'm, you know, waiting for some kind of a technical setup, and I'll have some interest in that.
Yeah, I am too. I'm really watching that 57.50 a barrel. We're about $1 a barrel away, but that could be 30 seconds in crude oil with some type of a, you know, military scare somewhere. But you're right. This market's in a really strong bear market, and this is the first really major ABC we've seen in a long time. So we'll be able to see. We have a question about cattle futures, and why were April cattle futures so strong over the 10 cents higher than the June? Could you explain that to our folks here, Rich?
Sure, because the cash cattle's been trading 163 to 166 over the last several weeks. And April's cattle's job is for price discovery, and so there's convergence of the futures and the cash.
Okay.
The two come together, and the futures have come up to the cash. Now, in February, the convergence occurred in the first week of February. Here it's taken a little longer to converge. You know, we're probably looking at a 63 market, maybe 65 market this week, and the April board is 60.80. I'm expecting that, you know, the April board is going to meet the cash, and if we trade steady, then April's going to have to continue to work a little better. But between the spring highs and the summer lows, there's typically a $15 break. And right now, June cattle are I'll call it $9 to round it, $9 under the June cattle, $9 under the April. But if there's a $15 break, they could still lose another $5 or $6, and
sure,
that isn't, you know, impossibility, because just end of February, June cattle were down at 39 cents, and, you know, at the beginning of this week they're at 48 cents, 148. So,
wow. Rich, we have another question about weather. As I recall, and we've been friends for 40 years, but did we ever talk about Ivan Browning? You know, on his work on weather.
I knew Ivan Browning personally. You know, he used to come to Minneapolis IDS Center. You know, the big investment firm, and I was at Payne Weber, and he used to come in and talk, and he talked about the solar vortex, and you know, I don't know that it's global warming.
Right.
I do think it's a solar vortex, and it's causing more extremes and volatility in the weather, and that's why I'm highly confident that there'll be some concerns this summer once the money's in the ground, once the seed's planted and the fertilizer's in the ground. When
will corn finish planting? By end of April?
Well, like in our farm in South Dakota, you know, farmers plant to the crop insurance these days, so we couldn't even start planting until April 15th, which was yesterday. And they'll plant up into the second, third week of May. You know, they could plant even longer, but as you get late in the season, then you have to go from, like, say, 105 or 110-day corn to maybe 95 or 90-day corn, and the shorter the maturity, the less yield you're going to get. That's why your highest yields are in Iowa, Indiana, Illinois, where they get longer growing seasons.
Rich, how much of the corn is genetically modified?
All of it.
Really?
Dang near, Larry, because the first year Monsanto came out with some genetically modified corn. Okay, my brother's got regular corn. The neighbor has genetically modified. The cross-pollination, anything that's within 2 miles gets cross-pollinated, and it's all genetically modified that year. Now, there were some lawsuits, and, you know, Monsanto, you know, paid off a little bit of this and that. Yeah. But by the second year, I mean, it's just cross-pollinated. It all takes a little breeze, and that's how, you know, corn makes the corn, you know, the pollination. So it'd be almost impossible not to have genetically modified corn these days because of the cross-pollination that occurs, at least in my opinion. Now, there could be a scientist would argue with that, but, I mean, I know what happened the first year the Monsanto stuff came out, and you know, and then China at that time was not a buyer because they didn't like the genetic modification, and Europe was not a buyer. And some of the genetically modified corn had negative effects on Hispanic people in their corn, you know, that they use for their tacos and stuff.
Uh-huh. Rich, what about soybeans? Let's take a quick look here at soybeans and tell us what you're looking at as far as beans. It looks like we could make one more lower low here, down about another 40 or 50 cents.
Yeah, I would be surprised if we don't, check the $9 level on the soybeans, on the new crop, particularly. I mean, the new crop's $9.49, the old crop's $9.60, $61. We expect that acreage increase will be 3 to 4 million acres. You won't really know that until late May, early June. But it's at least going to be 2 or 3 million, and that's going to be less corn and more beans, and it might be a lot more beans. But then, beans are an August crop, so you still got to have that weather in August. And if the rain turns off and the heat turns on, the 1st of August, they can still have these magnificent moves. And historically, 15% rallies are not on, that's more the average. And if you get any weather concerns, it can be 30 or 40%.
Sure. What's been the effect of the U.S. dollar on exports and stuff for the grains, Rich? I know you do a lot of research on that. What's your feeling on that?
Well, it's definitely slowed things up, and so the prices have had to come down to be competitive with the world market. And then, of course, down in South America, they're harvesting the corn and beans right now, and we're like in meal the other day, we were $20, $30 over what they could get it from South America. But then you have to figure in, is the freight dependable or not? But some markets, like the hogs, have gotten so cheap that the dollar didn't make any difference. I was just looking at hog exports this morning, and they've increased over a year ago. But a year ago, we saw $1.30 hog prices.
Wow.
And now, April went off the board at 63, and we'll call it 63.5 just for a round number. Yeah. That's kind of less than half, right?
They were trading.
So even if the dollar went up 15%, these hogs are still, pork is still cheap.
They went from what, 43 a pound to what, $1.20 in hogs?
Last summer with the problems that we saw, with PED, hogs topped out at $1.30 a pound.
Wow.
And the
I
April
remember
hogs
when
went
the guy
off yesterday at 63.5.
I forget the name of the trader that got washed out on the low tick a couple years ago when they were trading at around 40 some cents a pound when they switched over the contract, and he had blown up and he had to get out on the absolute low part of the range. We don't need to mention his name, but that was really a wild time in hogs. I mean, that was, if you had the guts to buy those far out contracts that were trading like 20 cents a pound higher than where the cash hogs were, you made a lot of money.
Right, but that was a hard thing to do, a hard thing to pay that much premium. Just like right now, the hard trade is probably to sell the June cattle, which are, $8, we'll call it round number, $9 under April. Uh-huh. And they're probably $11 to $14 under cash.
And these
but between now and in May, the new calf crops that are now fat cattle, those calves that were placed on feed, they were placed a little later last year because the price of feeder cattle was so good that you could keep on grass and get $2.15, $2.20. Why not keep them a couple of weeks extra and put a few extra pounds on?
Rich, I love talking to you because after talking to you for 15 minutes, I realize I know so little about this business and I should stick with Forex and gold. Hey, listen, buddy, thanks for joining us. We'll have you on in another week or two, okay?
All right, my pleasure. Trade well.
You bet. Thanks a lot, Rich. Give regards to the family.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, folks, we're back, and I wanted to mention a couple of things that I think are interesting anyway. First of all is that we have Party City being listed today here in the New York Stock Exchange. I think it's on the NASDAQ, as I recall. Anyway, we have a Party City store here in Tucson. We actually have 2 of them. The only time I ever see people in them are on holidays. Christmas, Halloween is their big day. And but boy, it's a big store to have such a very small traffic. But stock is up pretty strongly today. One other thing I wanted to mention is that Sarah and I have a friend that we met about a couple years ago that works for one of the largest companies in the world. It's on the New York Stock Exchange and the NASDAQ that everybody uses. I'm not going to mention what it is, but we had the experience just a few weeks ago visiting with he and his family, and we were talking about big data and how they look at things, and he actually shocked us to show us that just by getting the person's zip code and what was it, the zip code and one other thing, There's a couple of little quick things that you could get real easy, through Facebook or whatever they have to do. And they can literally tell you when you're going to make your next purchases, how much they're going to be for, what your overall income is, and all that stuff. And that's that's mainly, it was just absolutely startling. It went through it very quickly, but what they know about you from big data should scare the hell right out of you. So I know you folks like this social networking. It's a lot of fun, but you got to be really careful. All cell phones have built-in GPS coordinates now, so whenever a phone is answered or turned on, they pretty much know where everything is. So I'm a little afraid. One of my favorite movies was Gene Hackman and Will Smith, the enemy of the state, from 20 years ago, about this type of thing. And there's been several others, but that's something else that you just have to be really careful of what you put out there. And I imagine Hillary Clinton is probably wondering why she said some of the things she said in the mysterious emails that disappeared. So we'll have to wait and see. It appears that Miss Clinton will be the, I guess it's Madam Clinton will be the next president, that because of all the money and the stuff that's out there, hopefully there might be somebody at least challenge her a little bit. One of the questions that we have here about the wheat, Rich thinks wheat is very, very close to a pretty good bottom. It won't be affected by growing, as he mentioned, but he's looking for wheat around the 470 level. It's about 15 cents from where it is now, is what he will be watching. So that's another thing that keep in mind from the commodity point of view. Natural gas, I didn't get a chance to talk about it, but we've had that major bottom form. Mr. Z in the room told us about it last Monday. It certainly came in the last 3 days. It's basically been very, very strong, and we have a chance for that to go pretty good. The last comments will be about the crude oil. I posted in the chart for the weekly gasoline futures into the room, and you can see we're right up to a 382 retracement of the highs from last June. In gasoline. And remember, gasoline has been the leader. It bottomed first. It's had the strongest rally. So keep an eye on gasoline, because with the crude oil getting close to that 57.50 a barrel, it's going to be very, very interesting to see the movement here that we get up when we get up to this level. There's a lot of patterns completing at 57.50 in the oil, and then of course we're very close in gasoline, and the same thing in heating oil. We're having the same type of the rally in the heating oil, because the whole complex is moving together. That's one of the good advantages of a commodity, is when you have a commodity that can be changed into components, it's easier. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.